So previously I told you that what is a stock split and what is a reverse stock split and why it happens. But now in this tutorial I'm going to tell you a few reasons why companies go for stock split. And the first reason is high price. Now the primary reason why companies choose stock split is sometimes the price of the stock goes to very high levels, like a stock going to $1,000 levels. Now, this makes the stock quite expensive, as people who want to invest with a small amount of money would not like to buy, because either they wouldn't be able to afford it or they wouldn't want to buy because the stock price is so high that they don't want to allocate a majority portion of their portfolio to a single stock. So for example, a guy starting out with $1,000 in stock market would obviously not buy a company having a share price of $1,000, because then his entire portfolio would consist of only a single stock. And also, if a guy starting out with $5,000, then he would also think twice before investing in such a stock, because he's investing in a single share and that share contributes to 20% of his portfolio. So that's why companies always want to make the stock affordable to a large majority of people by going for stock split. So the next reason is psychological value. Now this one is interesting because most of the people in stock market have this notion that if a stock price is quoting at high price, for example a $500 or more, then the stock price will not go up or it is too expensive for them, and they feel like that there's not much upside, and they prefer to invest in shares that are quoting at around 30, 40 or $50 or even less than that, and they don't know or they don't care about the actual value of the company or how fundamentally strong the stock is, but they want to buy shares at around 30, 40, $50, which can be one day trading at $500. So when the company goes for a 10 for 1 stock split, making a $500 stock a $50, then suddenly these investors find the same stock cheap. Although nothing has changed, the value remains the same, the market remains the same, the fundamental remains the same. But investors get excited due to the favorable nature towards low price stocks. Also, they think that by buying a $50 stock, they can buy 10 shares, whereas by buying a $500 stock, they get only one share. Whereas the reality is, irrespective of how much shares you get, it doesn't matter. What matters is how much you invest in each stock. People can buy 1,000 shares of a stock whose price is 50 cents, but that doesn't mean that I would be earning more because now I have 1,000 shares instead of previously investing the same amount and getting only one. So this is psychological notion that if I buy more shares, I will be getting more shares and I would be making more money. It doesn't actually matter. What matters is the amount that you invest in the stock market, and also the company you invest in, how valuable the company is, how fundamentally strong the company is. That's what matters. And that's another reason why companies go for stock split. And the last reason is liquidity. Now, this is a logical reason why companies go for stock split. Actually, when share prices are high and people buy less and less, and also as I told you in the second point, people prefer low price stocks. So when the stock split happens, the outstanding number of shares of the company increases substantially, which leads to increase in liquidity as more people are able to afford it. And also people who would like to buy cheap stocks joins the party, which many times increases the share price. So as there are more shares outstanding, the liquidity of the shares increases. And that is another reason why companies go for stock split. So now if any one of you guys have any doubts about stock split, reverse stock split, or any of the reasons that you are not able to understand it, then please ask in the discussion forum and I'll get back to you as soon as possible.